That's where our liquidity data, that's really what it says, okay? It's nothing about, it has nothing to do with, what direction the market is going to go. It has nothing to do with, where the markets will be. These two lines, the S&P 500 and the junk bonds ADL, they don't have to be in lockstep with one another. That's not what it means. It just says, if we do rally, how sustainable is that rally? And apparently my audio was muted on YouTube and Twitch, so hopefully that now clears it up. I just toggled something real quick there. But anyway, this is, again, this just tells us if we do rally, how sustainable is it? All right. Also, too, one of our other liquidity data points that we look at is the New York high-low line. Again, it is going down faster. Okay, so that gives me conviction to buy those puts if we get to this level. Again, this has to continue. Okay, this has to continue. Our liquidity data still has to remain this way. If not, again, no go. All right, so there's no emotion in this. It just either it is or it isn't. All right. As far as our other indicators, let's just take a look at TIP TLT inflation, forward-looking inflation indicator. It gapped up today to the upper end of our box. It's kind of been stuck in this box now for a couple of months. I wouldn't be surprised if it makes its way down. Now, if it starts breaking out above and closing above higher, watch out. QQQ, you're in danger, okay? If this starts breaking out, QQQ is in danger. Tech stocks, growth stocks, all in danger, okay? So keep that in mind. Keep a good eye on this. Again, guys, ZF, this is a very important indicator. You know what? I'm actually noticing people on Twitter talking about ZF and the 5-year futures now. I guess people have caught on. I guess I don't know if people are listening in or what, but I'm sure it's a well-known thing. Even when I used to work in the industry, this is something that we looked at on a regular basis. So it is a well-known thing. I didn't make this up. This is something that people have been doing for a while now. Longer than I've been alive, actually. So ZF, if we want to see a sustained rally, we want to see this make higher highs and higher lows. Okay? We really want to see this make higher highs and higher lows. Without those higher highs and higher lows, I think this is there's still going to be a lot of demand to get into short-term treasuries. Again, Tina, there is no alternative. There is no such thing. Okay, there is no such thing as there is no alternative. There are alternatives now. Cash is an alternative. There's money markets now. You can get actually decent yield. 2-year treasuries. What can you get on a 2-year treasury? You can get 4.26%. Okay. As a fund manager in Wall Street, your number one objective is to not get fired and keep the gravy train running. All right. And so if there's a lot of volatility in the equity markets and interest rates are moving up and down a lot, it's really hard to price equities based on their cash flow and based on their earnings. So as a fund manager, what do you do to save your job? Well, one thing you can do is park some of your money into 2-year treasuries. All right. And so that is why these short-term bonds are worth looking at, because it just shows you what is that demand for safety assets and for cash. Okay, what is cash doing? All right, that's what really it shows us. All right, until we see higher highs and higher lows on this, I don't think we're going to see a sustained rally in the S&P 500. Okay, and I think the higher highs and higher lows are going to coincide with our junk bonds ADL going up, and probably too our New York high-low line going up too. And again, I've studied this line extensively. We have not seen a sustained a sustained bull market without this curving up above all its moving averages. We have not seen that before. Okay, so could this time be different? I mean, I guess it could be, but I'm not willing to bet money on that. And again, every time we've gotten out of a bear market, this curled up. That is why I had so much conviction that we were going to turn back down at our levels, because this never turned up. All right. Now, if this starts turning up, oh yeah, I'm going to stop buying those puts. But until then, business as usual. Business as usual. All right. Let's see what's going on. Actually, today, I also want to take a look at the MOVE index. This is our kind of like the VIX of bonds. All right. The volatility within the bond market. When this tends to go up, VIX tends to go up. And now, we've already seen the VIX go up. It was the MOVE index was kind of in this box, and it broke out of that box. That's why we saw I think that's why we saw the VIX go up to 32 yesterday. We really haven't seen the VIX really move like that for much of the year. The VIX has actually been quite tame for the sell-off that we've had, and I think a lot of that has to do with hedging demand. I think because cash is an alternative rather than holding on to shares and buying puts, I think a lot of institutions have actually sold some shares and raised cash. So that puts a little bit of or at least dampens the demand for put buying, which means VIX is going to stay kind of timid. Now, I think if this MOVE index keeps going up, we could see bigger moves in the VIX. We could see VIX go up over 30, into the 35s, maybe into the 40s. All right, I'll believe it when I see this. Okay, I'm not gonna try to predict the future here. Okay, if this keeps going up and up and up, then we might have a chance of seeing an outsized move in the VIX. Okay, so another thing to keep in mind. All right, the dollar today coming back down a little bit. Over the weekend, we had a lot of currency, some currency movements. On Monday, either on Friday or Monday, the Prime Minister and Great Britain, in Parliament, they came out with a plan to cut taxes. And, it's almost like our version of Reaganomics. And the market didn't take it very well. Okay, the market did not take that very well and sold off the British pound. We saw like a 4 or 5% movement in the British pound. Let's just take a look here. GBP USD. All right, saw that huge wick right here. Look at that. I mean, when do you see something like that on a major currency like the British pound, right? That was a huge move. Overnight, panic in the currency markets. It spilled over into the equity markets yesterday, okay? So we saw this huge panic in British and the British currency. Now, if you look at their bond market, their bonds also notched up, just like our rates are going up. Their yields also went up. Eurozone bonds also went up in yields. So we're seeing global sovereign bond yields all tick up at the same time. Okay, so that's a very interesting development here. Will we see more volatility? I mean, right now, I do think this is like a little bit of bounce, but if the bounce fails and we see continued volatility, especially to the downside in a lot of the risk-on currencies, British pound being one, euro being the other, the Australian dollar, if we see all these risk-on currencies going down, I mean, the dollar is just going to keep going up. That's going to put a lid on how far any rally can go in the S&P 500 and the U.S. indices. So again, something to look at, and I think this is going to be very telling. I think we're going to see volatility happen in the currency markets first before we see it in the equity. So I think it's going to give us maybe perhaps like a day or two heads up on where equities will go. We will see. Okay. Speaking of TIP, TLT gapping up, let's actually take a look at DBC. Oh, see, there you go. Commodities are gapping up. That's why. Commodities. Speaking of commodities, crude, oil. I mean, are our levels good or are our levels good? Remember what I said in our plan, 75, 77, 75, 77, That is our buy level, right? Even a couple of weeks ago, I talked about the White House staffer who came out and said, "Oh, we're going to buy. The White House is going to authorize buying for the strategic reserve at spot market 80, and spot market right now is trading about $3 or $4 over futures." And so that's why I said 75, 77 probably is a good idea to start buying. Lo and behold, it touched it, and boom, it popped up. Now, did I take the trade? No, I did not, okay? I'm not very interested in taking this trade at the moment, although it would have been profitable. Maybe I should have, but you know what? This is a JOMO moment. This is a joy of missing out, J-O-M-O, JOMO, all right? This is joy of missing out. I will gladly miss out on this. I would rather short oil here, right here. Okay, again, 115, 120. If we're looking at the CLZ, the December contract, I'm looking at this level right here, 105, 110 zone. Okay, to short. All right, I'd rather play the short than go long. Okay, I mean, if you know, for those of you who exercised patience and actually had the discipline to jump into on this trade, congratulations for you. Okay, but it's not for me. I'd rather play short when we get to these levels right here. Again, it's just the risk management. It's just so nice because we short here. If we're wrong 2 or 3 days, it goes above our levels. We just exit for a small loss, you know, and we just move on. And it makes risk management a lot easier. So I like the reward to risk right here better for a short, okay? So I'm going to remain patient on that. For other commodities, corn, very, very stubborn, and it doesn't like to go to our level. It just kind of likes to chop around in no man's land, doesn't it? We are getting closer to harvest. We'll see what happens. There is a hurricane that's coming into the United States. There is a chance that that hurricane might pass through some harvest areas for corn. You know, right now I think it's like even chances where it can either go through Florida, you know, and go through that bottom part of Florida, or it can go further into the Gulf of Mexico and go into some of our corn harvest areas. We'll see what happens. But if you're a corn trader, you probably want to keep an eye on what's going on, and you know, and just make sure that you manage your risk accordingly. I believe that storm is supposed to make landfall on Wednesday night. So could we see some volatility in corn futures coming up in the next couple of days? Very possible. Again, I'm willing to short when it gets up here. Okay, I'm shorting corn if it gets up here, especially before next planting season if it gets up here. All right. Wheat, same thing. It's we saw a little bit of a bid. We see it's coming back up a little bit. Still, I mean, this to me is not much of a price action signal. It's just still in no man's land, really. Soy harvest is also coming up, as is corn. There's no trade for me here. For me, the only trade in the grains is corn. Okay. Speaking of other commodities, let's just look at meats. Meats still up in its range. I mean, this I think is just a little bit of a pullback. Is this the start of a downtrend? I don't think that's confirmed yet. I think this is just a little healthy pullback. I don't really see anything. And the meat market's worth mentioning. I'm still in those PPC shares. I'm still like, I mean, how much underwater am I? Well, at least it gapped up today. But it lost a lot of it. If we get back to our break even levels, I'm going to definitely be selling some out the money covered calls. I should have done that when I first got in, but I didn't. I only did my initial buy. I never did my bigger buys just because I got scared when this started going down. But I still have the initial shares that I bought for PPC. I went over that like a few weeks ago. I have my alert set. What will happen will happen, and we'll see. Gold, guys, I told you guys, gold. I'm only going to long gold at that level if ZF, the 5-year futures, start turning up. It never did, so my trade never triggered. Thank God it never triggered, because that would have been a disaster. Okay, that would have been a real disaster. So, That's why I kept telling you guys ZF, or I believe last week and the week before, I said if you're gonna look at one chart, all right, it's gonna be the ZF chart, right? That was last week and the week before, okay? And then that's the whole reason why I never took the gold trade. I know some of you all asked me about that gold trade. Oh, it hit our levels. Are you gonna buy? I said no. It's hit our levels plus ZF curving up. We never saw ZF go up, so no go, okay? I'm pretty strict about my rules. If I don't get everything I want, if I don't get all the conditions I want in my data and in my indicators, I don't move, all right? So I'm willing to stay patient. Generally, patience pays. You only want to act when you have an edge in the market, okay? No edge, no trade, okay? It's really that simple, all right? Wow, is that our high low? No, that's not. It hasn't updated yet, okay? That hasn't updated yet, so we'll see, okay? Our high-low line, sometimes the high-low line will start down. Usually when the high minus the lows, when it starts down that much in the beginning of the day, it's usually not a good sign for the rally. No? Oh, here it is. So in TLS, they give you the intraday a little bit quicker. So it's not that bad. It actually started a lot better than yesterday. So that's at least a good sign that maybe this might, still keep going up a little bit, as far as a relief rally is concerned. And again, this is just a relief rally. The major trend is still down, okay? The major trend is still down, all right? Our liquidity data still is weak. Our junk bonds ADL is accelerating to the downside. Our New York high-low line that we always look at is accelerating to the downside. I don't know how much of the beginning of the video got cut off because of technical difficulties, but let me just show you that again. High-low line accelerating to the downside. Our junk bonds ADL line still accelerating quickly to the downside, and actually it's weakening. Okay, it is weakening. All right. Ethereum. I wanted to talk about something that I noticed in Ethereum. The open interest on Ethereum options is going back up. Remember how we saw about 5.5 billion or so after that huge sell-off in ETH? Well, now we're back at 6.9 billion again, just shy under 7. Okay, we're back there again. So we're starting to notice people participating in the Ethereum options market again. Okay, we're starting to see that again. Some Decembers, these are a little bit long dated. Yes, we're seeing Septembers as well. But for ETH, and again, for those of you who are joining us from Twitch and YouTube, I put our ETH trade up there. For ETH, I actually went in on, it was Thursday night, Friday early in the morning. Remember that 1241.46 level that we talked about for weeks and weeks and weeks? Well, we finally got it last week, and I nibbled on a small long position on physical Ethereum at those levels. Let me just pull up my Ethereum chart here, right there, okay? So we're about 10% ahead. It hit literally that point. We've been talking. This line has been there for, I don't know, like how many months? For months now. And we got our levels and we went up. I am going to sell Ethereum when it gets to 1650. Okay, 1650. I don't have access to Deribit, so I can't sell covered calls and buy protective puts on my Ethereum position. As an American, as a non-entity, they don't allow us to open accounts at Deribit. So when it gets to 1650, I am going to take profit as long as our liquidity data remains weak. All right. As long as it remains weak, I'm taking profits at 1650. And those are, where did I get that level? That level is actually from our Ethereum chart, or I'm sorry, from our Ethereum options levels. Right here, well, it's not really here. I think it's the December and the March. That's where we start seeing OIs on calls really going up. Yeah, around 1700. Look at that, 1700. We're starting to see volumes and also open interest really start picking up. I mean, that's a huge level right there. A lot of calls were bought for December and March at those levels. And I think just like, you know, with the Ethereum merge, I think once it gets to those levels, a lot of those large orders that bought those calls, they're going to take profit. Okay, so I don't want to be holding the bag when I can't even manage risk using options. So I'm going to get out of 1650. Okay, so again, liquidity remains weak. I get out of 1650. All right. So nothing has changed on that. Let me just go over the S&P 500 plan one more time. And again, guys, yesterday I sold the 366 puts. Whenever the VIX gets to 32, all right, and the puts to call ratio on the S&P 500 gets to 2 or more, I sell in the money puts about a month out for assignment. Okay, and that's my way of getting long-term shares. And I told you guys when we get to that 15.5 times forward earnings, which is around 365 on SPY, that I was going to leg in to some SPY shares in my long-term portfolio. One way I do that is I sell in the money puts for assignment. All right, now I've been doing that trade since 2017, and I've never lost money on that trade. Every time VIX gets to 32 and the puts and call ratio goes to 2 or over, that is a overwhelming indication that we're going to see volatility start tapering off. Okay, since 2017, I've never lost money on that. Since 2009, you wouldn't have lost money on that either. Okay, so it's a very, very good trade. It's a very compelling trade of mine. I do it every single time once I get that indication. So again, sold some puts, 366. I believe I sold it at 1090, and I think right now it's trading around 960, 970 or so. Oh, look, the VIX is popping up again. So we'll see what happens, okay? I'm willing to take assignment right here, and I will buy even more shares if we get into this 345 zone right here. And when we get to this 345 zone, I'm not even going to sell puts. I'm just going to buy shares outright right here, okay? I'm not waiting to sell puts, because if you sell puts and you close over it, you're not going to get those shares. I'd rather get those shares. Okay, for me, buying those shares, selling those covered calls, raising money like that is, you know, central to my strategy for long-term wealth building. All right, and again, as long as our liquidity data remains weak, if we see a sustained bear market rally, I'm going to buy 1 to 3 month puts right here at 41.25 zone, but I'm going to do it on IWM. All right, I'm going to do that on IWM. And also I'm going to sell covered calls on UUUU and HUT. I bought some more UUUU and HUT last week on Friday. I believe UUUU I got in at I think like 557, and HUT I got in at like 165, 167 or something like that. So, you know, I did double up on my shares. I'm going to be selling covered calls, buying protective puts once we get to that level. Okay? So, what question? I'm seeing some people type on voice chat text. What is that? Brave. I don't know what that means. If you want to type out your question, go ahead and do that. Okay, so there's that. Any questions, guys? Anything else you guys want to look at? Oh, let's look at some of the other things we have in our plan. Ford. Ford gapped up, but it's coming back down. You know what? I might venture into some leaps if it gets to 11. If it gets to 11, I'll buy some long-term leaps. I believe the 800-day expiration is open now. I may venture into that if we get to here, if we get to this level. But if that doesn't happen, then no go. All right. What else is in our plan? As far as I know, that's all the things that are in our plan. So, you know, go ahead.
Did you look at Intel?
Intel. Oh, yes, that's right. Intel's part of our plan too. Intel, I still think as the 10-year Treasury yield keeps going up, I'm not very comfortable owning tech stocks as the 10-year Treasury keeps going up. 10-year Treasury, actually, let's take a look at the 10-year Treasury. 10-year Treasury is starting to get into the four. It's about to get into the fours at 3.961 right now. Oh, it started down, but it's starting to move up again. I think if it surpasses 4, probably going to get another round of volatility, to be honest. All right. And so I'm not willing to hold a tech stock if 10-year is still going up like that. If the 10-year still keeps going up, I can see Intel getting lower. I mean, we might see we might see low 20s. Honestly, we might see low 20s. Okay. That TNX is what's stopping me from buying tech stocks right now. Not a good place to be in. I know some of you guys are in AMD puts. I don't know. Hopefully you guys took some profit. If not, I don't know. It's no man's land for me. I'm not chasing this. I'm not chasing puts. I think some of you guys bought puts like around here or so. To me, that seems a little bit like chasing, but if you guys made money on it, congratulations to you guys, okay? I'm willing to stay patient for bigger put buying levels. Again, that 41.25 zone on the S&P 500. Google gapped up today. Yeah, you know, it's only 0.8% or so, 0.6% up now. We'll see. And again, TNX. If you guys are playing tech stocks, keep an eye on the 10-year Treasury. If this keeps marching higher, your puts are probably going to be fine. If it starts coming down, we might start seeing bids in tech stocks again. Okay. Actually, let's look at one of our tech stock indicators. We haven't taken a look at this. Oh, this is growth versus value. If it can keep coming up, then yes, on bear market rallies, you know, buying calls on, you know, QQQ or tech stocks may make sense. But if this is going down, then yes, shorting tech stocks, shorting tech is probably going to work very well if this keeps going down. Okay, this is growth to value. So if this is going down, that means value is going to outperform. If this goes up, it means growth is going to outperform. All right. Any other questions? Questions, comments, rude remarks? Anything else you guys want to look at? All right then, in that case, that concludes our market memo. So if you're joining us on Twitch, YouTube, or Facebook, check out the video description. We have links to all of our sites and our Discord channel where we talk trade around the clock. That's also where I send out my live alerts and exclusive market commentary. Hey, like I said, it's all free. There are no paywalls. We actually make money trading here. So what do you have to lose? Go ahead and click that link. Join us. We're all about education and building a thriving community of traders where we can bounce ideas off of each other. It's of the people, by the people, for the people. All right. And so hope to see you guys there. Oh, I see another question. What's going on? What's the growth versus value chart indicator? It's this right here. It's this. Can you not see that? Why can't you see it? It shows me that you're seeing that you're able to view it right here. Oh, okay. So that's a technical problem on your end. Yeah. So what you can do on TradingView is do IVW/IVE. IVW is the growth ETF. And IVE is the value ETF. So go on TradingView, IVW/IVE, and you can track it yourself. All right. Any other questions? All right, guys. In that case, then I'm going to hang around in the Discord for a bit. And as always, I will, we're going to be back here at Market Open tomorrow and on Thursday. And if I have any updates to my plan or any trades that get triggered, I'll let you guys know on Discord. Okay, guys? Have a great day. See you guys soon.